Hey guys, Stock Saturday and another reasonably good week. I'm up about 4%, 17,000. Pretty solid performance, I think, compared to the S&P, which is up 0.83%. So yeah, I sort of was expecting that to be a little bit better than that. It was up 0.25% on the Friday and only 0.83%. The Nasdaq sort of doing a little better, 0.92 just on the Friday and 3.1%. So yeah, done slightly better than that, which I was really happy with. It's sort of coming from all over the place, really. Taiwan Semiconductor sort of doing really well, back above 200. Broadcom sort of having a fairly good day, 5.3% just yesterday. Max as well, sort of shooting up a fair bit. It was sort of $5 just last week, I think, and Process up to 40.22. So yes, I've been looking at sort of Tencent again as to maybe whether to sell that off, but yeah, they still look sort of reasonably good, and obviously they're other ventures and buybacks and that sort of thing. Obviously, I've got a lot of cash sat here at the moment that I sort of in two minds about what to spend it on. So having even more cash would sort of not really help that. So you may see at the bottom here, I have made another purchase. Did 2,200 into CME Group last week, and yeah, this week I have bought BlackRock. So yeah, largest asset manager in the world. Sort of quite like the look of them. Didn't realise it was quite such a high margin business, and yeah, we'll sort of probably come back to them next week. But yeah, let's have a look at some other news. So we're getting the monthly reports from the crypto miners, and we also got CleanSpark's full year results, which, yeah, the more I keep sort of seeing these results, the more I sort of think this isn't a long-term holding, sort of long-term viable business model, really, because things just never look all that good. They sort of give their balance sheets, which is a little bit out of date. We kind of know that looks a little bit better since then. But yeah, the well, yeah. So saying that, they've got cash, quite a bit more cash than last year, and Bitcoin obviously is more than that now. They've sort of got more Bitcoin and it's a higher price. But yeah, coming down to the revenue side, revenue at 378 million. Cost of revenue 165, but depreciation is sort of the big debate about how you sort of include depreciation and amortization. Sort of building a hell of a lot of new facilities and buying cards and all that sort of thing. Yeah, just sort of depreciation and cost of revenues is not far off total revenue, and then you've got sort of payroll expenses at 74 million, professional fees 13 million, G&A 30 million. So that would sort of, without any of the other sort of shenanigans, I would call it, gain on fair value of Bitcoin 113 million. I would sort of exclude that. Impairment expense, sort of exclude that. It's one-offs. Yeah, just sort of looking at operating profit, I suppose you would call it, excluding these, it's basically a net loss. So yeah, obviously this is up to September, so we've had the sort of enormous rise since then. I think Bitcoin was sort of 60,000, 65,000, over this time. Sort of dropped to 50,000 even. So wasn't the most profitable time, but then you've had difficulty increase since then, and things don't look quite as rosy as they maybe do just looking at the Bitcoin price. So yeah, you do sort of think, when are they actually going to be able to put up some good numbers and sort of justify the big spend on expansion? And of course, all the while they are quite heavily diluting shares. So they've got 300 million shares authorized, and they have issued, by the looks of it, 270 million. So they were showing sort of 216 million average for the period. I don't really like that figure at all. Would rather just know actual figures to today, or to the end of the quarter. Don't really think average across the period is particularly helpful when you're diluting quite a lot. And then they do this sort of adjusted EBITDA figures. So taken out, they do show it as net income loss, taken out impairment assets, taken out depreciation, taken out share-based compensation, which is quite a bit. That's sort of 7-8% of revenue. Taking out interest income and all expenses and that sort of thing, they get to 245 million adjusted EBITDA, which I don't really think is a hugely useful figure. Taking out all of the depreciation, is probably not ideal, because this isn't sort of building a factory that is going to last you 50 years. It's buying sort of Bitcoin mining rigs that are going to last about 3 years, if that. Maybe even 2 years being super profitable, the way difficulty keeps going up. But wasn't 100% happy with these results, and still maintain that after this bull run, assuming we get more of a Bitcoin bull run and the miners do okay, I will probably be selling out of them and not coming back, I would have thought. In the short term, at least, I still think they can do well. Sort of short term being the next, 6 months maybe. I'm sure they'll get their sort of large spike at some point as FOMO fever sort of starts kicking in. But we had their November mining update looking pretty good, has to be said. They mined 622 Bitcoin in November. That's slightly down. The sort of obviously difficulty's going up. Their hash rate is going up as well, but difficulty is really sort of keeping pace. So surprising hash rate is going up and Bitcoin going down. But Bitcoin holdings at 9,297. So I've been sort of noting that they're catching up with Riot, who sort of have always maintained a strong position. They had about double the Bitcoin on the balance sheet that CleanSpark did not so long ago, but CleanSpark have been mining more for many, many months now, and now 9,297. So they ended the month at 33.7 exahash, pretty good, and they're sort of looking to get to 37, they're saying, this year, end of year hash rate goal. And they want to grow to 50 exahash in the coming quarters, they're saying. Whether that means by the end of 2025 or sort of midpoint maybe, Q2. They are saying updates on Mississippi. That's a 1 exahash operation, so nothing sort of too much there. That was sort of turnkey sites. They do like these turnkey sites, which I would kind of agree with. Take them over and install your cards immediately. If you've bought, S21 Pros, you want to be getting them going as soon as possible. But then in Wyoming, they are building 2 new centers, and that's going to be a 5 exahash expansion. So not all that happy with sort of expanding and this hash rate coming online in months and months, like Hive especially, looking at their sort of doubling their hash rate by September, I think they're saying, which I still think could be the end of the bull run. So Hive could be in trouble sort of in a year or two, but we'll have to see. Coming on to Riot, we've had the November production, and it's still looking sort of fairly poor and slow going. Similarly to CleanSpark, they've got slightly less production in November compared to October, down 10 Bitcoin, 495, despite increasing hash rate quite a bit. So they've sort of held all of this, sold no Bitcoin again. They now have 11,425. Everyone seems to be wanting to build a giant pile. And they've increased the deployed hash rate at Corsicana only sort of 0.9. Seems very, very slow progress. but Rockdale stayed exactly the same, and Kentucky increased 0.4. So yeah, only a 1.4 exahash increase. Operating hash rate is a little better. Rockdale sort of obviously deployed stayed the same. They're just replacing rigs, and that's increased to 11.3 average. So I sort of do the maths, if you like, and sort of add on that amount again, and they get to sort of across all three of these about 28.5 exahash that I would think they're at the end of November, which is still slow going. As I say, CleanSpark are at 33, and looking at their sort of targets that they did reduce these in the last month, I think it was, which wasn't great. As I say, they're sort of, CleanSpark are at 33 today, and Riot are saying 38 by Q3 of next year. So that was quite the drop. The graph is unchanged from last month. So yeah, Riot have sort of been lagging behind and looking a bit poor overall, to be honest. Power credits are up a little bit. 1.4 million in total power credits compared to 1 million. So all-in power cost came down 0.1 of a cent. And yeah, fleet efficiency at 22.3, which again, CleanSpark at 19. They've sort of been buying the newest rigs and upgrading. That's why they have a lower cost of production. So yeah, my thesis that sort of Riot would start to outperform, getting all of this deployed hash rate sort of running again and expanding to, what was a fairly juicy set of quarterly targets that they had. Now they've reduced all these down. It does look like CleanSpark is sort of continuing to be the performer, and probably helpful that it is my largest position in the ISA rather than Riot. But I did sort of go pretty big on Riot in the options, so we'll have to see what happens sort of next year. Hopefully a rising Bitcoin price can just lift all of these and get a decent gain out of them. But yeah, not ideal. Just checking on KGHM's monthly production as well, as I like to. Sort of kind of tempted to maybe put some of my cash into them, because the copper price has sort of been languishing a little bit, and silver sort of not doing quite as well as gold, still sort of languishing. So really nice mix, I think, going forward for KGHM. Pretty much gold and pretty much copper and silver. So yeah, potentially all of my holding at the moment is in the ISA, but I might just put it in the invest sort of options account and but put it into KGHM stock. So yeah, somewhat tempting. The production numbers look pretty good. 61.5 thousand tons, up from October last year, and the sort of 10 months year to date is looking really good. 605,000 tons. It's more than I was expecting. Silver at 118 tons, sort of ever so slightly down from October, but a nice number. The year to date figure is lower because of maintenance, and yeah, overall pretty happy. I think that's sort of pushing 50 million ounces nearly for should be for the year, and yeah, sort of, as I keep saying, makes them second largest producer. Obviously had Glencore, Vale, and Rio Tinto in sort of the portfolio in the past. Now all three have gone, and yeah, I'm not sort of entirely too keen to get back into any of them, really, just because obviously Vale and Rio Tinto sort of much heavier into iron ore, and yeah, Glencore are sort of 40% copper, but the rest I don't have a sort of enormous conviction in. Glencore still do a fair amount of coal, which isn't particularly friendly to anyone, and yeah, I just sort of think KGHM, it's copper and silver, and a very small amount of TPM, molybdenum, but as far as revenue goes, it's it's nothing at all basically. So yeah, I really like their whole mix. So kind of crossing Rio, Vale, and Glencore sort of all off the. I mean, they'll stay on the watch list, of course. I'll always keep an eye out. But as far as sort of wanting to get more into commodities with maybe some of this crypto money, at the moment, it's looking like either gold and silver miners or KGHM. Unless if you guys have got any sort of suggestions, certainly pop them in the comments. So a little bit of economic news for the week. We had some bits and pieces. UK house prices still unbelievably strong, 3.7% up year on year, which is crazy. PMIs for sort of Europe and UK looking pretty sorry for themselves, still below 50. We had the ADP non-farm employment change, a little bit worse than expected, a little bit worse than last month, but yeah, that was countered by the official survey. And ISM non-manufacturing PMI, quite a bit worse than expected and worse than last month, but still above 50, which I sort of listening to Raoul Pal before, he sort of sees above 50 but not that much above 50 as sort of perfect, really, because it means it's, you know, not recession in theory, but that they'll be wanting to sort of print money to try and juice this a little bit more. And sort of I think Michael Howell kind of agrees with that on the liquidity front. That's good for liquidity. You know, if you get sort of PMIs at like 60, kind of sucks all the money out from everywhere, and you know, you don't get money into sort of speculative assets. People don't actually buy the stock; they just invest sort of money in the actual economy. Jobless numbers still look pretty good for the US. Nothing to worry about there. I think people sort of still expecting this to start rocketing up, but yeah, not at the moment. And then the Friday non-farm payrolls report. So last month you had a very, very low number. It was 12,000 because of the hurricane everyone blamed it on. Obviously didn't hit the whole of the US, but a lot of people were sort of temporarily made unemployed and they've now come back. They revised the 12,000 up to 36,000, said it wasn't quite as bad as they originally reported, and they were expecting a 200,000, 202,000 number for this month, and it came out 227. So we all sort of kind of know this, you know, number is a little bit fake, but the market sort of tends to move on it. And you had hourly earnings at 4%, was expected to drop slightly, and similarly sort of month on month. So yeah, wages still looking pretty good. Participation rate down slightly. And this 227,000 was almost all in the private sector. So presume that is probably people coming back from being temporarily unemployed due to the hurricane. But there you go. And yeah, so private was negative 28,000 last month. Again, they'll say due to the hurricane, that was revised up to just minus 2,000. So not that many people lost their jobs. And yeah, that was pretty much it for the news. So portfolio-wise, sort of the ISA's looking slightly up. Still have a little bit of cash in here. Somewhat tempted to put that into Fresnillo with sort of gold and silver having a little bit of a rest. I think they look quite good. Below my sort of average price, although I did sell Fortuna to sort of buy that. So yeah, kind of still happy with that. And it's sort of effectively, you know, if I'd still been in Fortuna, that would be looking reasonably positive. But yeah, the sort of miners have done okay. Coeur Mining sort of had quite a good week. Equinox Gold sort of slightly up, I think. And yeah, CleanSpark sort of finished pretty much flat, despite Bitcoin breaking 100k and sort of admittedly coming slightly below it round about now. But yeah, sort of not a huge amount of change in here. Pan American and KGHM sort of not really changing a huge amount. As I say, sort of KGHM down to 128. They were at sort of 160s at one point. but still in profit, and I think it's looking a reasonably good price. Not sort of wanting to tempt fate too much on more of a fall. I think I might just sort of add a little bit to that over the next week or two, but we'll see. On the invest side, the option side, things looking pretty good, I would say. Riot sort of not really moved all that much. Equinox, sort of the options and the stock tend to, fluctuate quite a bit. They don't always follow. The options are down 5,000 quid with the stock sort of not really moving all that much. I think the stock is slightly up on last week. But yeah, people's sort of wild expectations for next year can change. Hive, sort of similarly to Riot, it's not up sort of that much more than Riot is, but the options went up quite a bit. Kua mining up slightly. Himax up quite a lot, obviously, on the back of that reasonable week. And yeah, still sort of got a load of cash sat there. Was kind of waiting for a little bit more of a drop, maybe on Equinox, and sort of pile into the January 2027 ones. Bob Lucas sort of keeping an eye on him, was expecting a drop in gold sort of into the end of the year. Sort of Bitcoin doing quite well, and just not that much focus in gold. And then sort of gold would do quite well for sort of next year, but we haven't really had that pullback in gold just yet. It's been fairly flat, so I've still got a reasonable amount of cash sat there. We'll see. So leave your thoughts in comments below, and like and subscribe. See you soon.